Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey everybody, welcome to the stream. It's Thursday. I'm a bit late today, sorry for that. But I'm also a little bit, I haven't been able to go through everything today, so it will be good to use the stream to catch up a little bit. I saw a couple of tickers that I want to go through from yesterday. One was from the Daily Movers and the other one was from my tracker sheet. And then I think I will go through a little bit of more of the tickers in my tracker. Maybe look at some charts today, and I was thinking also to check out Open Insider and maybe go through some filings from Bury or something like that, just to pull up some companies to see if we can find something there. Because lately we have only used the sheets to find companies, and there are other methods also that we use, but we haven't gone through them so much yet. A little bit because of the time, and also because we are using the sheets most, but there are definitely other screeners that we also take advantage of and use. And you know, a website like Open Insider or Whale Wisdom can be two of them. So I was thinking maybe to go through a little bit of them today if we have time. But let's start here at the dashboard. I see some things are moving today. Sugar is up, cocoa and natural gas. Lithium is also up, and I saw that the gold miners are a little bit down. Also a few things down here at the risk column. That happens a lot, like up and down here in the risk column. I see Virgin Galactic is down. If we pull up that chart, it's a bit volatile, this one, I think. See, you can have some big moves in a short period of time and then also fall. So I'm not really paying too much attention to stuff like too much here in the risk column. It's just something, if something catch my eye. But today it doesn't really. This is pretty normal movements. At least at the first glance it is. China and Hong Kong I see is a bit up. China internet. I saw that the oil prices are down today. So some of the oil companies have performed bad today. Wheat is up, corn approximately at 0. Yeah, nothing too much interesting. And I like that the natural gas is a bit up. You've seen it has dropped a lot here lately. And maybe oversold a little bit. Maybe it's on the way up again. That we will see an uptrend here. But who knows? Let's wait and see. This is the weekly chart, by the way. You You can see a bit up and down on daily, but maybe you can see start of something that moves up a little bit again. Yeah. So let's go straight into the daily movers then. Maybe also check the weekly moves today. You know, it's Thursday, so it's only one day left. So it could be worth checking the weekly also. And by the way, if you didn't watch Dane's streams on Tuesday, go and check it out. It was really good. He went through a few companies, and he told me that I watched it also. I tried to watch our streams back to just to check the content and the quality and everything like that. And I liked it. He saw some companies that he said he liked, and I agreed. A lot of the stuff there he found was interesting. So watch it if you didn't. And also, by the way, we can see we have a little bit of more subscribers now. So thank you for everyone who have subscribed to the channel. I hope you enjoyed the stuff we go through here, and hopefully, if you, I mean, feel free to, if you watch, feel free to shoot a comment or something in the chat, and we will try to answer as best as we can. And hopefully, that's the aim of the entire stream, is to get a conversation going and some discussions, and yeah, and some discussions about some companies and stuff like that. So feel free to use the chat. I saw there was a Unify is actually one of the tickers I've pulled up already. There was an insider buy. We can go through it later. You see they trade close to the 52% to the 52-week low, and we have some yearly insider buys here. Some good metrics all the way. We can pull it up later. I have it already. I saw some of the ones I have gone through in the before. You see the market cap here, 12 billion. Beverage company, sells beer and malt beverage all over the world. We can pull it up just to check, because this is a huge company. Let me see if I can find it. And it has a move down today of 7%. So yeah, gonna be interesting. I'm probably not gonna buy this in my Redneck Johnny portfolio here, laughing stock portfolio, because this is too big for what I usually deal with in this type of portfolio. But it can be interesting anyways to just pull it up. So let's do it. You see some oil is down today. Tiny market cap, but it's worth pulling them up. WSTL. Oh, they might not have it. WSTL. Oh, they don't have it here for some reason. This is what's good with device sheets. They have a Discord server, and if you for some reason don't find a ticker, you can shoot the founder a message, and they will do everything they can to add it pretty quickly. I've been very happy with the support there, so I might do that later. Also, tiny market cap, DSS. I don't really like the market caps when they are like less than 50 million. It gets a bit small to me, but if there's something I really like, I mean, you can trade that low for a reason, and there can be a lot of upside there. At these companies with a lower market cap, that's where you can get the biggest gains sometimes. But it's also, in my opinion, it's there's some more risk there involved when they are so small. But I saw the insider, they own 33% here, so it's worth checking them out just to see quickly if it's something to move on with or not. Another big one, gold. I don't think I will pull them up. Same here, small but a big inside their own, CLRO. Inside their own. All right. And you see we are moving a little bit away from the 20% to the 52-week low here now. But they are always worth doing some research on anyway, so you can add them to tracker, and if there comes a drop, you can move in, you know. I saw a bunch of Noble Education. I think Dane did some research on them, so I'm not going to pull them up. You can go and watch his stream on in the description. We list the tickers that we go through, so you can check the description and find the stream where he went through it, and you can hear what he's had to say about it. I think it was last week. Yeah, so let's just quickly also check the weekly here. I'm not going to check all of them here because they tend to be way... Oh, this wasn't so long actually. We can do it quickly then. And by the way, if you haven't watched before, there's some color coding going on here, and that's why you see me skip a lot of things, because the black ones are companies I have checked in the past 3 months, and the white ones are also companies that I've checked in the past 3 months, but that I have also included in my tracker sheet. So that's why you see me jump over some of those. Wide point. Also a tiny market cap. Trades at a new high, so I think I'm going to leave them. And I'm skipping the pharma still. I'm not interested in those right now. It's not for me right now. I'm not saying there's not opportunity there, because I know there is, but they tend to be a bit too volatile for me, and they tend to go a lot up or down on news that is not even solid news, but like rumors and stuff like that. And other companies does that as well. I just find it like a section that I don't want to be in right now. Too risky for me, in my opinion. You say insider buy Intel. Let's just quickly check that out. Oh yeah, I think we have gone through this already. Yeah, nothing too much here either. Ah, this kills me. NMBR 26% this week. You know, I was in NMBR and I sold out too early. I got a double, but I could have got a triple and even more if I held on to it. But that's part of the game. You gotta take the gains also when you have them. And don't get it wrong, I didn't have a big position. If I did, I wouldn't have sold completely out. I would have trimmed. But I had a smaller position, so I just took the money and divided it on 2 other companies. That was my strategy at the time. So usually you would trim out instead of selling all on a double. But I don't think I think it's a bit expensive now. I never saw it more than like 4. Between 3. First of all, when I bought it, I was targeting like a double up till $2, which is what I got. That was based on the assets. So when it went to 3, I was a bit surprised, but it wasn't impossible in my head. But 4, I know they got a new contract and everything, so could be going more up this, but it seems a bit high in my opinion right now. But I can be wrong. I was wrong when I sold out. So, but then again, I was right when I bought in, so I got a gain there. Shouldn't be too sad about it. But yeah, let's go to the fundamentals then. I think we are done with the daily and weekly movers here. And we can start with this company that I found in the daily movers yesterday, ASUR. I don't know how to announce this. ASUR, probably ASUR software delivers human capital management solutions through the lens of entrepreneurs and executives with an owner's mentality. It helps small and mid-sized businesses to develop their human capital and allocate their time, money, and technology toward growth. Its solutions include ASUR Payroll and Tax, ASUR HR, and ASUR Time and Attendance. The firm's ASUR HR services offer ranges from online compliance tools to a fully outsourced HR department. The company was founded in 1985 and is headquartered in Austin, Texas. So they help businesses with practical things, which is a nice business, I think, but probably a bit competitive. But maybe this is a well-known company that because I don't live in the States, I haven't heard of them. But for all I know, they can be terrific. So let's check them out a little bit more. I see it comes up as levered here, but it doesn't issue shares. So it means like they have control of the debt pretty much. I see they have some cash here on the books. How much is that, by the way? Let's just check it. So they have around 13.5 million in net excess cash per share. They're 0.59. You see the assets, it's traded at 9.51. So they trade above the assets right now. Sorry. And it does, it does generate cash. You see historically not very high, which is why the averages are also being hurt a bit. They're a bit low compared to the price, I think, right now. And in a 7-year average, if you look at the free cash flow, it has consistently actually been on the minus side since 2008. And I'm not a big fan when the cash generation is so small here, to be honest. But it shows up as green on some of the others. I see a little bit of green here in the margins too, which means it has gone up. The gross profit ratio has gone up, as you can see here. Also the revenue and on the 3-year average is up. CapEx a little bit down, a lot down since 2021. But some of the other margins has gone down. But most of them are up. Look at this net cash flow. But it's all over the place, so that's why you should use the average, you know. But it's also green here. But there must be, yeah, look here, they have had some sales lately. 3 years in a row, actually. But the retained earnings are moving slowly on the positive, far away from positive, but slowly towards the positive side. Earnings negative, also on the 3-year average. Look at this, horrible earnings. Except from 1 year, they have all on the 3-year average. They are on the minus side. So this is like a growth type company that needs to grow a little bit more, improve themselves so far, I think. But what I do like is from 2020 they have had some revenue growth, but look, they have also issued more shares since then. So it's a little bit like you see some positives, then you see some negatives here already. But I just want to check who owns this. I saw insider buy. And let's also check out some Seeking Alpha articles. You see, this is not a lot. It's a lot of money, don't get me wrong. I would be very happy if I got that money, but as an insider purchase, it's not a lot. You can see when we get to this kind of buys, we can talk a little bit more. But you see it's from the same guy actually, but he bought there a lot on $5.77, and now he bought again a little bit close to the 8 range. So he has probably made some money here, you know. And as far as I can see, he hasn't sold. And you see he has been buying consistently for these are very old. Yeah, he seems to buy at least once a year. I don't hold this very high, to be honest. I don't think this is very something that I should pay too much attention to. But it's nice to see, don't get me wrong. It's nice to see. Someone writing on this? This is a recent article. Copyright, it was a strong buy when I bought it, and it's only gone down. Bag holding at the moment. You're not alone, so there's a lot of people here that has been losing money holding this. But look, 20% up since the article publication. ASUR's revenue has grown impressive with a CAGR of 17% into last 12-month period. This has been driven by an aggressive go-to-market strategy. Okay, so they have changed their strategy maybe. Underpinned by quality service. Okay. ASUR is gaining market share. That's what we said in the beginning. Is gaining market share from its peers, has low churn, and has very positive feedback from customers. That's good to hear. According to this guy, I don't know. I haven't seen many of these research articles by this man or woman. So I don't know them, but it's still good to read. I would have to dig a little bit deeper into how popular they are, because according to him, they are. You can read this and think that they are on a bit on the way up, you know, which matches some of the fundamentals. You can see here there has been some growth in the revenue, but also in the shares, like we talked about. Book is very stagnant actually, which I don't really like. A little bit up on tangible book the last year. But what I saw though is these sales, and then you see here down at the debt, they have paid down some of the debt. So maybe they have used this money that they have gotten from the asset sales to pay down the debt, and that's something that I like to see. And as I told in the beginning, it shows up as levered, but it doesn't issue shares. So that tells me that they are not that levered. The company appears positioned to achieve more consistent growth. Okay. We are expecting adjusted EBITDA margin to exceed 20% in the coming years. We expect less volatility in the coming years due to its growing recurring revenue base. ASUR is performing exceptionally well relative to its peers, with superior growth and margins. At a smaller size and targeting a fragmented market of small cap clients, we see a solid runway to maintain this trajectory. ASUR's valuation does not reflect this attractiveness. It is trading at a discount to its historical average and a small premium to its peer. This guy has a buy rating, and reading just the summary, he's very bullish on this as a growth story. And he also talked about the margins, the EBITDA margins. Mine is actually a bit down, but maybe he has some new numbers. But you see the gross profit is substantially up last year. Others are too, even though net income is still on the minus side. It has gone up a lot in the last year. Same with the cash flow, operating cash flow, free cash flow as well, and net cash flow. So I think this article, based on what we see in the fundamental sheet, is so far describing what we see as well, you know. High quality business that is primed to grow substantially in the coming years. Product development is beginning to pay off, allowing it to gain market share and build its recurring revenue basis. And that's what we started to talk about when we saw this, so the business description. In the coming years, we expect volatility to subside and margins to improve. How's the chart been doing? Actually, I haven't checked the chart. It's a little bit all over the place. Look at this volume spike here. That's a big one. And here, of course, the pandemic. Trades at the high of the pandemic now, which is a bit interesting to see. And then it got smacked back down to 5. And then, of course, you see the big jump up here to 16, 17. And it got down to 8 again. And now, of course, you can see it has been going up a little bit lately. So this could be on the way up again, but it's hard to tell. Look at this drop. So this is the volatility it's describing. And it never got oversold. Got overbought here and then just fell. When was this? April. Fell pretty quickly down again. So this is what he's saying now. He can see a more stable growth that will make the volatility be a bit less now in the future. Improvement in outlook and return of positive investor sentiment, which you saw at the comments. They were not very happy with the gains or the losses they have so far. With the company already pushing towards a free cash flow margin of more than 10%, investors are primed to win regardless, be it through share price appreciation or an initiation of distributions. Very bullish though so far, this company. I mean, this article. I just like to go at the bottom and read like the final thoughts. Here you have the valuation. ASUR is currently trading at 2 times last 12 months revenue and 10 times EBITDA. This is a discount to its historical average. Discount to its historical average is reasonable in our view. The company has had a volatile history and its share price has responded in turn. And they keep talking about how it is compared to its peers. So if I want to take if I like this and want to dig deeper, I would need to go in and check how it is in that landscape that they are operating in and compare it a little bit to other companies that is in the same space, and then take a decision based on everything. But according to him, here he say that they are more attractive than the other ones. Key risk: economic downturn impacting client budget, technological disruption or cybersecurity issues affecting client trust. Yeah, I would assume there are more risks, though, but this is a key risk. Final thoughts: ASUR is a high quality business with multiple levels of growth. The company is gaining market share, blah blah blah. So they basically like what they see now, that is well positioned for growth, and that they think it will take a substantial market share. And it could. Based on the fundamentals, you see that the margins are improved, they have better revenues, but they have also issued more shares. They are over book value right now. And so far, for me, this is too little cash generation. Yeah, but it's interesting it will be interesting to see if they will generate more cash in the near term. But I don't think I will add this to the tracker. It's not. It needs more. This needs more for me to be attractive. And of course, can be wrong. This can be a multi-bagger from here. But I have other things that I think are more attractive right now. Keep in mind, guys, we reserve the right to be wrong as well, and you're gonna see us be wrong probably a lot, and that's part of investing. And you see that we already talk about stuff that has moved up that we have been tracking and didn't pull the trigger on, but that's part. You cannot be in all of them. But it's important that the ones you are in, that you do your own research on it and pull the trigger based on your own thinking. So we're going to be wrong and we're going to be right. Hopefully we are more right than we are wrong. That's how it works here. And so far, both Dan and I have been with the using these sheets and everything, this strategy. We have been picking some good companies that has done well for us. I don't see too many that I pay attention to. So Cooper Creek, I've seen them in some other places that I've been. Okay, I think I've seen enough. This needs a little bit more for me to be attractive, but I will remember that I've seen them before, and you know, they have some cash. It's interesting for sure. This, like, where will it go from here? But historically, it doesn't seem very well driven. Maybe I should check if they have a recent change in management or something. Right, so I saw they have a named vice president of investor relation. Today announced that Patrick McKillop has been named vice president of investor relations. Okay, so this is something to pay attention to, but not the biggest change. Maybe this guy is exceptional and will do exceptional well, but just something to pay attention to. I also saw they have like a debt pay down press release here from September. It has terminated loan and security agreement. And that's what we saw in the fundamentals. Remember, we saw the debt payment here. So that's a very good sign. That's a lot of debt too. And that tells me that management is, maybe they you see some good things here, but this just needs more. I will remember that I pulled them up, and it doesn't fully qualify for a tracker at this moment. So let's go to UFI, and UFI is one that I pulled up from the tracker. They looked I was thinking to pull them up because of the inside bio. You can see it here. It was pretty big actually. And it was from this guy Kenneth Langone. And he bought almost 3 million. And you see he has been buying a lot in the past as well. But this is a big one. This is a big buy. So this is one I have in the tracker already. But we can go through who this guy is. Maybe you know him. But he's a billionaire investor, best known for organizing financing for the founders of the Home Depot. So he has a big name in the finance world in the States and in the world. So normally when you see a guy like that who is also a 10% owner and the director, that's pretty bullish. Of course, this is a lot of money for him. Sorry, this is a lot of money for a lot of people. And I guess when you are a billionaire, you don't want to waste any money anyway. So this is also a lot of money for him. But if he messes up, it's not the end of the world when you have more than $1 billion. So if you look at it like that, it's not a lot for him. But I assume like even if you have a lot of money, it will always hurt to be wrong and lose money. And I'm just assuming, but if you start from nothing, 3 million is still a lot of money. So, but for him, of course, not too much. 10% owner and director. Like I said, this is usually bullish. On the fundamentals, you see they trade well below book. They trade now at 6.8 market cap, 123. And you see the cash generation, operating cash flow, positive all the way through. And the 7-year average is actually higher than the 3-year average. So 145 per share. This looks good right now if you just base it on book and that, and you can see the calculator here. Like Dane has mine taking into consideration the assets here in the book value. So since this is so high, it gives it a very high valuation as well. But it also take into consideration this operating cash flow and free cash flow. But which is not fantastic here, but since this is so high, it gives it a high valuation. So I'm not paying too much attention to this here, but it would be interesting to check what it has here on the books. And you can see also EBITDA is positive on 7-year average. So this looks like it has been well driven. You see here in 2007, and then in the pandemic it got hurt a bit, but hasn't really stagnated. Well, it has, but it had a good year last year, and then it came down again a little bit on the equity growth. And you see also on the revenue, it's down from last year, but up on the 3-year average every year since the pandemic. Earnings a bit up and down. And they have debt. They have even taken on more debt now. But it doesn't issue shares. And I bet that's because of this big number in the assets. Near-term debt 40 million. Total current liabilities 70 million. You see here the excess cash 46. They have bought back a little bit of shares in recent years, but maybe they have to issue more to deal with the debt. We need to go into the balance sheet here, I think. So 50 million in cash, property 200 million, a lot of inventory. We forgot to read the business description. They engage in and manufacture and sale of synthetic and recycled products from made from polyester and nylon. It operates through the following geographical segment: Americas, Brazil, and Asia. The American segment sells recycled and synthetic products to yarn manufacturers, knitters, and weavers that produce yarn. So it makes clothes and stuff to make clothes of. And you can see it trades 14% to the 52-week low, and the 52-week high is 10. So this might be cheap here, you know, except especially when you also saw that inside buy. But he came in at 5. And you can see the trade date. Sometimes I get tricked by this, because the trade date was 22nd of December, but the filing came like that's yesterday, right? So this price didn't exist yesterday, so I don't know. I don't know all the details on how that works, but and inclusive, I've heard about them. Isn't that Ubben? Is that his name, Ubben? Anyways, they sold a little bit. Just got curious now if it is the one that I think it is. Yeah. Yeah, so he's a big name in the industry world, I think. He's had some misses lately, but no, sorry, he doesn't. He did well, but I saw he was. Remember we talked about Nicola? He was involved there as a big owner, but he got in at very low levels at the time, and I know he took some gains there, so he probably did well there. But he was on interviews talking well about them, and of course that didn't turn out like he hoped to, but I think he still made money. So yeah, just interesting to see them that they also sold. So this is what caught my eye, the inside buy, and of course it's already in tracker, so I like the fundamentals, but you can see the drop in revenue there. The margins has probably taken a hit. Cash generations are a bit up though, and then on the average you see it's a lot of red here, so I don't like that necessarily, but also that's when you get the opportunities. And if this was at 575, was that the thing? 575. Recently, I don't know how that works, because it doesn't seem like it went to $575 on the 22nd here. Yeah, I don't know how that works. Was it like an option or something? No. Anyways, he bought and got a good purchase there. I don't see him on the volume even. 500,000 on the 22nd, right? I'm not reading that wrong. 22nd. Yeah, a bit weird. I don't understand why those numbers aren't matching, but he has bought, so that's accurate. And you see today up 10%. never got oversold or anything though. It hasn't done much like in the last. In the last time, it's like in a bit like this in a box, moving sideways. And then of course, if it breaks below the line or over the line, you can say that it's a. You can maybe say that the. Oh, sorry. I don't. I would probably move it to here. You know, I don't know. Don't pay attention to these stupid lines. But this, it has traded sideways, and it didn't come down here. You see, it tested the lows back here again, and also a little bit here, and didn't break it. It didn't get oversold. So I'm not sure if this will move down again, but you can see historically it hasn't been too much lower than this for a long time at least. And in the pandemic, it went down to above the level today, and then of course a big up, and has fallen since. But I think you can see like a bottom forming here, and then of course when you see the inside buy, then to me it's a bit attractive that and of course 6-8 now, big. I wish I was closer to 6 if I was going to take a position here. What are people saying? Oh, sorry, we were checking the balance sheet. I forgot. Okay, so they have a lot of inventories. They have a lot of property, plant, and equipment. That's a lot compared to the market cap, actually. So this book value is probably you shouldn't discount it too much, which is why it shows up as safe and everything. They have a revolver due in 27. Both are due in 2027. A little bit high. Well, not too high. Interest rate. The leases, just discount them. This compared to the assets. It's lower than the assets, right? But they are gaining depth for the past years, which I don't like to see. And what are people talking about? Painful wait for a volume recovery. Okay. So investors have moved a little bit away from this. Two times in a recent article, do you have a buy? So this is he's bullish, the author. Oh, Steven Simpson. I know. I've read stuff like with him before. He's not a bad analyst. He's a good analyst actually. So he's bullish. I didn't see him. Oh yeah, he has some bullish articles since. He has followed this company for a long time. This is from 2016, but then the later ones are from 2022 till now. So this guy probably knows this company well. But of course, also probably been wrong about them in the past. 24% down since this one, which was early early this year. Yeah, same here. Unify stock has continued to struggle due to ongoing volume pressure tied to weak retail clothing volumes. Yeah. With overwhelming demand, clothing retailers are still reducing inventory levels, leading to prolonged period of under-ordering. Unify is managing the downturn well, but weak volumes are devastating to profitability, and the company's capacity utilization is a significant factor. The shares look undervalued below 9, but an underwhelming Christmas season could further extend this painful customer inventory correction cycle. Retail is still not looking especially robust. Doing what they can, but it can only do so much. Okay, so he has followed it for a long time, and he feels like they are doing what they can, which is something to pay attention to, that the management is trying here. I can't and won't say that Unify's turnaround is inevitable and just a matter of time. A lower for longer down cycle in orders could create further liquidity and operating cost pressures that would force more drastic action from management and likely permanently impair the long-term potential of the business. I view that as a bear case outcome, and I do think there is upside from here, but it's hard to feel great about the near-term prospect of meaningful order volume recoveries given the current state of the economy. I think there's still a bull case here, and that patience will be rewarded, but there is definitely a point where patience becomes blind stubbornness, and I can't rule out the risk that Unify is a value trap. So good balanced article then, if he has followed them for so long, and he has had many buy ratings, he's letting you know in the article that he could be wrong here and has been trapped in this company. That's something to pay attention to, I think. Oh, Starbucks. Starbucks is here too. Yeah. Okay. Sounds like we're getting close. Time to start position soon. I don't think you want to wait to take an initial position. My guess is long on the 10% owner and on the insiders step in here. This was in the summer. Was he right about that? Yeah, he was. And it trades lower now. Starbucks is spot on with the things like that. What are your thoughts on the earnings release? This is of course a little bit old. This is one of my 10 best ideas. I expected to be a huge winner over the next 6 to 12 months. Target 12 to 15, 18 to 24. 18 to 24 month target 20 to 25. All right. That's interesting. That is interesting. And this is more recent from November. And this is from yesterday. I'm going with the 500k shares buy. How did you manage to buy below market price? Yeah, that's what we saw too. I don't know. Starbucks from November. They have been talking turnaround for too long now, yet are guiding for the new quarter we are in to be like the one they just reported. Their credibility is being increasingly damaged. Okay, so he has changed maybe his view a little bit on the management. That's also interesting. And was that comment is before this buy, right? Yeah. Would be curious to hear what if he has said something about them after that buy. And by the way, if you watch the streams, you know that Dane and I, we have come across Star Wars a lot, and that we value his opinion. And if you have Seeking Alpha and you look him up and you read his description of his investing styles, you will understand why we talk about Star Wars and why we pay attention to what he says, because this style that he is describing here is pretty close to what we are doing. So that's why we come across him often, and that's also why we pay attention to what he says, and we know that he has been successful. So that's why you see us talk about him a little bit. We don't always agree on what he says and stuff like that, but it's worth reading when he's in some of the stuff that we are in, or that we are tracking. Yeah, but I'm not seeing so many comments recently, so yeah, hard to say. He was not impressed by the guidance and how they have spoken about turnaround for a long time now. But then again, 3 million in an insider buy, that's worth paying attention to, you know. No, he just has that here in his filings. His only position in this one, and he owns 13%. So this is him then. So Inclusive is still in it, but you see they sold. They have it as like a 2% share, and it doesn't say when they first own it or anything like that. So it's a bit hard to. But it's in the 9 position in their portfolio. And if I remember when we quickly pulled them up, they didn't have so many, did they? No, so it's at the bottom actually. And just a small part of their portfolio. Yeah. They Uber and those, they have a little bit of different style and what we are doing. So it's not like I'm weighing this like super much, but it's still, I know he has been very successful, so it's something to pay attention to. But yeah, like my if I had a lot of cash, I think I would open a starter position here at the maybe wait for a little bit of pullback from 6.8, but I saw it earlier this week, so I could have gone in a little bit before the uptrend now. But because my financial situation, I don't have too much cash right now to just splash into the stock market, so I'm not going to do it before I find something that I'm very sure about. So I'm not going to do it here, but if I had a little bit of a room to play with some cash, I could probably have started an entry position based on the big insider buys there, and also what I read about in the articles from Steven Simpson and Starboss. Even though Starboss was a bit more critical now in the later period, it would be interesting to see what he feels about this insider buy. of 3 million. And the turnaround is clear, like you need a turnaround here when you look at the revenue drop. But on the average, it has gone up, you know, so they probably have the potential to turn this around. And but it's a bit like the depth here is growing. That's not super positive. But sometimes a big insider like this is enough to at least get it in our portfolio and just have a position there, just a small one, just to check where things are going. And I mean, there's a reason we track things. It's for things like this to happen and then catch our eyes, and then we can quickly move in. But yeah, like I said, right now I don't have the funds to do that, so I'm just gonna wait, because this is still a bit risky in terms of, is this a value trap? Will they be able to turn it around if they have talked about that for a long time? Maybe they aren't capable. Maybe the business isn't that good, you know. So and we cannot get away from the way our economy is right now. Like, people can't afford all kinds of things and have to save. So it's not a good environment necessarily to talk about that you're gonna definitely turn things around, because that may not happen. But okay, let's move on. Oh, this was the one with the hyphen, wasn't it? Or what do you call it? The hyphen? A, right? Let me check. Because of the ticker, Google Finance doesn't find it. So that's why you see all these things that hurts my data a lot. So this was the big one anyway. So and where are they based? Colorado. Okay. But as you can see, I can't really do much here. I have the recent numbers. And what was the price? I forgot. 64. Yeah, so above book. I mean, since this is too big anyways, I don't think I will spend too much time on this. But I will add them to the database just to get the color coding, because it's probably not worth pulling them up again in the near future. So let's move to the other one. This was a more tiny one, software technology, DSS. Engage in the development and distribution of paper product designed to protect valuable information from unauthorized scanning, copying, and digital imaging. It operates through the following segments: product packaging, commercial lending, biotechnology, direct marketing and securities, and investment management. The product packaging segment operates in the paperboard folding carton, smart packaging, and document security printing. Okay, so they are making things for paper products. You see here, tiny share count in the past has recently grown a lot. So I have very limited data. I would think I will only go with these numbers from here. Maybe even just the last 2 years here. The rest is a bit inaccurate. And just on that alone, trades very cheap though, 0.15. The trades below book actually, but it comes up as levered, and they have depth, and they also have near-term depth of 47 million. And look at the market cap, 21 million. So this could be a problem for them. But up to date, 20%. Cash metrics, awful. It's just the book value that stands out to me. Look at these margin drops. Terrible. According to my numbers, let's check if someone writes about them. Old articles, you can see they are from 2020 and 2021, so no one is writing about them. But is someone owning them? Well, I couldn't find anything there either, so I have very little data to go off of here. And I mean, the book alone is not enough to do anything, in my opinion. When you see all the rest of the data, this is accurate. 7 million. Look at the near-term debt, 47 million. How are they gonna fix that? Well, in property. Okay, in goodwill, forget about it. I just discount this. I put 0, especially in a small company like this. Did they have an tangible book is lower, right? Because of that. And then they still trade below. There's not a lot of leases either. It's like the heavy debt. Look, it's due next 2024. The vast majority of it is due 2024. No, not for me. Let's move on. Also a smaller company, 25 million market cap, trades at around $1. And if you go by last year, they have some good cash generation. Look at the capex, almost nothing. So you get almost the same number in operating cash flow and free cash flow, which is good, of course, but this is only 1 year. They have some cash. How much is that? $3 million. 3 million in cash. Near-term debt is 1, so they have control on that. Current liabilities is 5. And total debt 2. So they come across as safe. And I wonder what has made them have such a good year here. Engage in the design, development, and sale of conferencing, collaboration, and network streaming solution for voice and visual communication. Its products include professional audio, conferencing, speakerphones, professional microphones, and video collaboration. The company, blah, blah, blah. Okay. It's below book. It has cash. The margins are up a lot in the past year. capex is down and revenue is also down, which is a bit worrying that you see the revenue is almost cut in half since here, but you can also see that they have had some sales down here and also pay down the debt a little bit, so that's good, but that probably means that the revenue is now a little bit down. That's probably also why they have gotten the capex down, because they have probably sold some assets and focus maybe on the business that works, and maybe that's what has paid off for them. But let's see if someone has written about them. You can also see they have a little bit of inside buy and a high ownership. So it's also a 10% owner that has bought up all the way here below $1. And who is this guy? He's the founder of something. I just saw he's based in Salt Lake City and the company is also in Salt Lake City. And it seems maybe that that's his only position. He's not even here. There's not a big ownership, but I guess he's this percentage then. Maybe we can go to the D file and check if we find him here. It seems like there are probably brothers or something. And they together own roughly, yeah, 50%, half. They are majority holders. The wife owns something too. And who is this? Is it the brother? It's the son. This is family owned still, and probably the founder and the son, but they have resigned from the board. It said down here at least that the son has who resigned as director effective November 6, 2012. So maybe they are not involved there anymore, which is why they come up here as a 10% owner and nothing else. But he has bought $100 and he's up on that. And 26% today. What was that on? Did we see something here? Nothing. Oh, here. There's a press release. Sometimes they don't come up here in the news section on Seeking Alpha. So balance sheet improvement. Eliminating remaining debt with final 1 million payment on senior secured. Current cash balance increased to over 23 million with an additional 4 million expected. So they eliminated some debt, but that's not a big portion, no. There's some warrants. Oh, they got some tax refund. A big portion too, that they've probably spent on debt then. Yeah, we saw that they had some cash, right? Yeah. Oh, oh, sorry. I'm confusing now. The debt, forget my debt comments. I was confusing with the other company, DSS. Yeah, so these people, they don't have debt. And they paid down this one. So they paid off all the debt. So that changes, that changes. Sorry about that. I get confused sometimes. We move so quickly. But that just changes things, and this year that's what they said, like they have improved the balance sheet a lot and they got some tax refund and now they have cash. And you can see this year is, if you just look at this year, this is very green. And there are insider buys, family owned, tiny market cap, but no debt anymore. And they expect to get more cash as well. Said here, furthermore, the company has recently finalized a non-exclusive patent cross-licensing agreement, as previously disclosed in the company's current report. CLRO is expected to receive an additional 4 million in cash from the agreement in the first quarter of 2024. With over 23 million in cash and no debt and more cash to come, we are entering the new year well positioned to execute on our growth objectives. We believe that our robust balance sheet provides us a strong financial foundation as we work to capture additional market share, finalize our manufacturing transition, and continue new product rollouts in 2024. Interesting. I find this interesting, but risky. And of course, 26% today on that news. I'm too late already. Should have been smart like the insider who bought all the way here. And it's not that long ago even. Tiny volume. Oh no, sorry, it's not. It's a lot of volume. But you have these two big spikes that messes up a little bit with the graphics here. Okay. And you can see kind of find support here at the 0.60. And then it's breaking up. This is interesting. But at the same time, it's a bit risky because you're just basing this off 1 year here that are solid. But on the metrics, it scores well and it has cash and paid off the debt. That's all. That's very good. Trades below book, below operating cash flow this year and free cash flow this year, which I must say I like. Tiny market cap. No one is writing about them. Was this one right? Yeah. Very old articles, 21 and 2017. And that's it. There's no comments here. Interesting. Risky. I wouldn't buy here, but I'm thinking about adding it to the tracker. Let's check some of the press releases. So did they have like a presentation? I don't see any presentations other than this one from August. And it seems to me that a lot of things have happened since then. So I wish we had a more recent one. And it's just a general presentation of the company. All right, so I didn't find much there. I'm gonna add this to the tracker. Just because I like the recent year, I like the insider buy, I like the payment on the debt, I like the cash generation relative to the share price, and of course my thinking if can this continue to improve and improve the balance sheet and generate these numbers of cash. They could be in a good position, especially now with no debt, and they already have cash on the books. Competitive place though, I mean space for their business. Family owned. I'm just gonna add it to the tracker to pay attention to the development here. So CLRO. Networking technology. Good price to enter. Right now, I don't think we will get back here to 0.60. When did the insider buy? 80, around 80, 70 here, and then he bought a lot. I think I will say like I think I will say like 0.80. And by the way, the disclaimer, I know we say it a lot, but we have to mention it. These prices, they don't mean that we're going to buy at those prices, but it means just like something to catch our eye if it reaches the towards that price that I speak for myself now that I put, because I have also conditional formatting, so it makes me alert if it gets close to that. And it doesn't mean that I'm going to buy if it reaches that. It's just something that is meaningful to me and that I pay attention to. It's not a buy recommendation or anything. I would put this as medium because there's risk. Will it continue? And attractive fundamentals. fundamentals on the trailing 12 months data looks very good. Can they keep it up? Insider buy below $1. They just released a press release where they talked about a strong balance sheet and how they expect to get more cash in the near term. They have paid down all their debt and have cash on books. Pay attention to more insider buys, a drop towards 0.80 or new news. Can they keep up the strong quarters? That's going to be the question here. But definitely, for me at least, and the way I think, it's definitely worth putting them in there to follow them, to see if they can do this. Tiny market cap, don't get me wrong, there's a lot of risk here. CLRO. There. Oh, they are at the top. 26% move today. Yeah, interesting. It's still only like 40% from the bottom on the 52-week chart. I'm just gonna have it there. See what happens. All right, that was the tickers that I had today. But I see we have some time. I can keep it up a little bit longer. So I was thinking if we move to the tracker, just do check all these purple ones, because the purple formatting, conditional formatting here means that something recently has happened. And as you can see on CLRO, it's the press release that we just checked. So when they file a press release or there's some new news, it shows up here in the numbers. This means how many days it is ago. So 0 is today and 1 is yesterday and so on. And here you have the inside buys. So I'm going to check here. That was actually Unify and that Kenneth guy. That's what attracted me yesterday when I saw it. Saw a purple color there. I pulled them up and was impressed by the amount. So here, ATUS, they have a news and a press release today. Let's just quickly check what that is, which the market responded positive to. Oh, sorry. Altis USA offload cheddar news to private equity backed Miracon. So they sold some assets or what? Sold financial news streaming service cheddar news to media company Arcta, which is owned by private. Does this say how much? They bought them for 200 million. Terms of the deal were not disclosed, according to CNBC, which first reported in news. It is structured as an earn-out deal in which Altis USA will collect proceeds in the future if Cheddar meets certain performance targets. CNBC added, citing people familiar with the matter. The payments could amount to about 50 million based on internal projections. So it doesn't seem like and how is the fundamentals there? What did I write? And when did I add them? So in June, attractive fundamentals only on certain cash generation metrics, good operating cash flow and EBITDA per share relative to current share price. Some big owners, Baupost, okay. Debt heavy, no inside buying, which is a bit worrisome at these levels. Pay attention to inside buyers, and I have a drop. Chart looks bearish at the moment. So there's been no inside buys. And the chart has gone up a little bit now lately. Look at the volume. And it keeps going up a little bit at least. Look from here, November. Yeah, that's a big drop. It's a bit hard here to see, but like maybe if they break up a little bit more in the next on the chart is like around 5. So that's going to be interesting to see. Let's check the fundamental. Just don't clear out the ones I have first. This script is pretty sick. I can just press this button and it deletes all the sheets here, so I don't have to do it manually. I just want to clean it up so we get the new ones in. So ATUS. Here. All right, while that is loading, we can check some other things here. 1 day ago, GTN. Gray agreed to renewal, avoids carriage dispute. Okay, so they bought themselves some time probably. Yeah. And last month up 13%. Today 3. And what's this about? VSAT. VSAT gets 900 million US Air Force multi-vendor contract. That's a lot. Said it will work with the US Air Force Life Cycle Management Center as part of a 900 million ceiling indefinite delivery, indefinite quantity contract. Under the contract, the company is expected to prototype and test systems, hardware, software, and cybersecurity solutions to provide integrated multi-domain capabilities for the USAF. The company said its experts will accelerate and expand technology integration across the Air Force, and the contract has an approximate 5-year term with options for up to an additional 5 years. And there's no comments. And the price is not up by so much. Isn't that a bit weird? Seth Klarman is involved. Not only involved, but largest position according to Boston Value Guy. Why is there no comments on this 900 million vendor contract? I understand that they have some steps in the contract and everything, but isn't that more positive like than just 2% up? Wouldn't you think so? Let's pull it up too. And Klarman involved. Let's check it. Outpost. Wasn't Baupost involved in ATUS as well? Yeah. All right. That is Klarman. So it's not the largest, it's his number 6, but still massive amount, 6% of his portfolio, 6.5%. But they sold some recently. Estimated, I've never understood how accurate these numbers are, so I don't take it. I don't look at it too much, but 38. That's down if you believe that number. Where was ATUS in this? But they have GTN too. Here. A smaller position for them. All right. Where were we? ATUS. Here. CNDT. Hold on, what did I write about the VSAT? Ron Kitty has done research on it. Cove Capital is big owner, their number 1 position. Cove Capital, who is that again? Cove Capital. I don't see them anymore. Cove Street Capital probably. And they have sold a lot. And isn't this the I don't remember where I have this from. Anyways. This here. Sorry. He has been on yet another value podcast to talk about it. They generate cash. Oh, but that's not Cove. That's what I was saying. Like in my head, I was thinking, isn't that the Irish guy. I think he's Irish. And I don't think that's these guys. Anyways, it is this Irish guy, and I don't see him here, so maybe it's sold out. I remember I listened to that podcast, and chart looks a bit bearish, and it can drop even more, even though today levels are around the same as when COVID hit. Could go low based on chart. No inside buying. Pay attention to institutional own shit. Seth Klarman, is that inside buys and updates on the story? And the chart, what has the chart on? Yeah, look. Almost a double since October. Looks very bullish right now. If it goes above 31, look at the volume too. Not massive, but it's like over in this period. And also reach the same as this upside, you know. Yeah, that looks good. Okay, CNDT. Inside buying, Carl Icahn, big owner, 17%. Bill Miller also owns it, along with some guy that also is a big owner, Xerox. Another company Icahn is involved. I remember this from the RK streams actually, but I've also done research on them. Content to sell its curbside management solution and public safety businesses. This guy has a sell rating after a hold rating. And that came yesterday, and this news came today. No comments on it. And check the fundamentals. How's the chart doing though? Same, all all of these has gone up lately. Yeah, this looks good in the shorter term. GLDD. Great Lakes Dredge and Dock. I think I recently added them. Oh no, not recent at all. Long time ago. Great Lakes Dredge and Dock gets 173 million in awarded work. So basically just more business. Didn't go up a lot on that news though. GLDD. What did I write? This is a long time ago. Looks like a growing company who has managed their assets and buying of assets as well. Improved margins and growing book. Might be new ships. 4 years of earnings. Looks a bit boring, but could be some upside here if it falls low enough. Bonds has been taking a hit lately, down to around 80, but they are not due until 2029. Not a very leveraged company. So they had some bonds then. Pulling them up. Loco. Pollo Loco. They had a press release. Alright, so nothing to care too much about. And then finally, Ring Energy. Announces issuance of sustainability report. What is that about? Alright, so just an update on their ESG initiative. Also not super interesting, it's down today, but that's more to the oil price. I think oil is a bit down today. Alright, so let's check these out then. So first I see this is like insanely levered on the calculator. You see the depth. Good amount of depth, but these broadcasting companies, they always have a lot of depth here. So I'm not gonna pay attention to this dilution, which is why I'm gonna put this to 0. And then you see it looks a bit more attractive straight away. Actually, I shouldn't put it to, because then it doesn't issue any shares. But I can take the percentage. Yeah, like we have said before, like these numbers are not accurate. We use a lot of things that a lot of people don't do, but they mean something to me, and this is part of my style. And this deleverage calculator is important, but when the debt gets so heavy, it dilutes it so much that you can't really read too much into it, other than that it has a lot of depth, which is not necessarily very convincing. But it does generate some good operating cash flow relative to the price now. Has a big capex here, and the revenue is a bit down lately. Buying slowly back shares. Positive earnings, 135 on the average, which is pretty good relative to the share price. No near-term debt, but they have a lot in current. And here we should go and check the bonds, I think. They're probably gonna have some publicly traded bonds here. Symbol. Nothing. All right. And we use the SEC data. Look at this. I don't even know where to begin. What are people reading, writing about this? Business and balance sheet challenges set to persist. Some discussions about like the debt and that the first maturity date is 2027, which is some years still, but it's still so much. It's still a lot. I probably added it because of the revenue and these cash metrics, which are pretty good by itself, but it gets diluted with the calculator because of the debt. Positive earnings. So the guy has a point. If they can get the fiber network done and all the cost in that done and then start to manage the debt, maybe they can jump up this stock, you know. But this is too risky for me right now. I'm still going to track it. Don't get me wrong. I'm still going to track it. Post. Yeah. Let's move on. VSAT. Who got the contract with the Air Force, US Air Force? They also have a lot of debt, but they seem to have control of it. And look at this cash. I don't know if this is accurate. We can go straight to the balance sheet and check. Because that was a lot. Yeah, they do have a lot of cash. This is in thousands. So 2 billion, which is what I have here. They trade below book, not below tangible book though, which has been dropping a lot since last year. Look here, there's a sale, which is probably why the drop, and also probably why they have all this cash. But they took on a lot of debt also in this year, and they have issued a ton of shares actually, and they are not generating enough, I think, in terms of the cash here. Paying some dividends now. Earnings negative. It's about the potential here. What do you see as a potential? And I think I added them a while ago in the tracker. Yeah, 1.5 years ago. Stock has been beaten down by the recent satellite launch failure, but unique diversification across industries should hold financials fairly steady. Successful launches in 2024 could propel the stock back to historical valuation, which would lead to as much as a doubling of the stock price. And to be honest, it's 40% up since he wrote this. So I think I'm too late here. They have a lot of cash though. The company has massively diluted its shareholders, tripling its share base. Yeah, the company was forced to sell its best defense business to maintain liquidity. Okay, we saw the sale, right? And you know, with news today about this contract here, it didn't move. Well, it moved 2%, but it's not a lot. So I'm thinking, but on the chart though, it's up. On the chart, if you got in here at lows, which honestly I should have paid more attention to this drop here in October. $15 seems like a cheap price. $15 seems good, but it's double that now. Look how bullish this chart looks. If you just take it from here, it's not even overbought. This can continue to run. It takes out the 30. Maybe next is like 40. I'm gonna keep tracking it, but I think I'm a bit late here. We move to the next one. Conduent. Inside by 100,000 in the last year. From Henry Wood. And here, this was the Icon one, right? He bought a lot down here in 2019 at 8, 9, and 6. And today's 3. So he is down big here. But they sold some assets, didn't they? Wasn't that the news? They just sold some assets, sell its curbside management. Maybe that's one of his strategies that he has. And if you don't know Carl Icahn, there's actually a good documentary about him on HBO. I really liked it. He's a tough guy. He's successful, very successful. Carl Icahn, look him up. Historically, operating cash flow is pretty good compared to the share price, but I want this a bit lower than what it is today. When did I add this? Yeah, also 1.5 years ago. It was 4. It's actually below there now when I added it. Something to keep in mind though is that Carl Icahn is down heavily on this. And if you start to see the asset sales, his 9th position which is around 1% of his portfolio. Has he spoken about this? So here is his thesis at the time. This is old, 2019. Carl Icahn's reputation could lead to unlocking shareholder value. It could also mean profiting at the expense of minority shareholder. Thesis is Conduent is undervalued on a book value basis and has been targeted by activist investor Carl Icahn. This article seeks to analyze Conduent's business and balance sheet in order to understand why Carl Icahn aggressively purchased shares and if Conduent is a profitable investment. Seems to be a lawsuit that he took advantage of and bought stocks after the lawsuit was settled, and that he saw something will happen there, but obviously it hasn't so far. Amid the trade tension and overall shaky economy, most stocks seems to be chugging along, paying dividends and dealing with general volatility. However, blah blah blah. The well-known corporate raider Carl Icahn is waging war against Conduent. Conduent is a spin-off of the series. I actually remember Arcade did spend some time on this, and the structure was a bit complicated. It was connected to this Xerox company, which Carl Icahn is also owner of. In which Carl Icahn is a shareholder. Carl Icahn was upset that Fuji and Xerox were going to merge. Icahn believed that Xerox was being undervalued and launched a proxy fight to make sure the deal didn't go through. Icahn won this proxy fight and the merger never happened. Conduent was later spun off in order to create value for shareholders. Okay, so there's been some disagreement there in the board. And then, of course, his job now is to unlock value here. Icahns plans for Conduent, which he so far hasn't happened. If that was 2019, this is a pandemic. And of course, RK probably got in around here and then went up to 8. Well done. Well done. Okay, let's move. Icahns plan for Conduent. Conduent has a large pile of loans, taking away from the overall value of the stock. The first loan is not blah blah blah. The largest loan is currently. Will need to rely. I suspect Carline does not have concern for these debts, as his plan will most likely include purchasing the majority of the company and possibly taking it private, which he hasn't done. All right, I've read enough. I'm not comfy at these levels. I think it's a bit too high. Trades above book. The cash generation historically is good, but and even compared to the price today, I still would want it cheaper to jump in here. Is your earnings terrible earnings this year? If they sold that asset and the stock doesn't move at all. Yeah. Let's move on. Even though my conclusion right now is that I'm not going to go into these companies, I think it's good to get an update and take the temperature on where things are. And I pulled them up, remember now, because it lights up here, alerts me of some new news or some insider buys. So I just, for me, it's worth spending the time to get some updates here on the tickers I already have in the tracker. So this is GLDD, Great Lakes Dredge and Dock Corp, engages in the provision of dredging services. Simple business description. So it's raising its share count slowly over the past year. Revenue down now and also down on the average. You see capex has grown. Have they had some acquisitions? No. Book has grown also a little bit, not a lot, these years. I guess from here though, 17 and 18, it has gone up to 6, down a bit now. So in the latest year, you see some good colors here. Trades at 7.7, so the cash generation, and you see it comes up levered, but doesn't issue shares, which means they have some. They should have control of the debt, but the near term is 26 million, which is a lot. So probably something they have control of. A lot of insider buys the past year from Ryan Levinson, which is the director, around $6. Trades almost at 8 now, so good timing from him so far. Also the director. These are high numbers too. What's his salary? Let's check it. This is just a compensation. This guy is probably Swedish. That's a Swedish name at least. Yeah, I couldn't really find his salary here. Let's just go through it again. And see the Ryan Levinson. He's not in that list because he's the director. Anyways, he probably has some money when he can buy stocks like this. I was just gonna check if this is a lot for him or not. Maybe if I Google him, I can get some information. Nah, nothing. Anyways, good to see though. Good to see this is a high amount in the past year. Yeah, revenue down. Historically, good on the cash generation, but they had a good year in 2019. This is a construction really. Yeah, this is a dredging company, right? But lately, I'm not impressed by these numbers. And also, you see the earnings is down. But the chart was up, right? Chart was pretty bullish right now. This was they got work. Margins. There's a decrease. Cash metrics a bit up. But yeah, this doesn't look so interesting to me. Not at these levels. And was Klarman involved here too? I can't see it. Anyways. Yeah, good to get some updates on that. And I've added one ticket to the tracker today, and got some updates on a lot of the companies in my tracker already, which I found very useful. Tracking is a big part of the strategy here. So that means when you add things to a list, you need to follow up on it to get the chance to pull the trigger on the right points. And what I usually look for when I have them in the tracker, and just can eventually I pull up the charts and to just look, and it's very interesting to me if I see like a fall like this and a bounce back up, and then it tests the bottom again and it holds. Then it's very interesting for me to see maybe that's a good entry then, that it doesn't take out the low, and then maybe you can set a stop loss, and like for example, if it breaks the bottom there and it goes 10% below, the stop loss get triggers and you're out of the position, and you only lost 10%. Because a lot of the times when it retests the bottom and the fundamentals looks good and there's stuff that you like there, that can be a very good entry point to get these quick bounce up again. So I'm probably gonna go through more of the charts in my tracker in the coming streams, and just pay attention to the charts a little bit more. Because I think that's good to pay attention to. But yeah, interesting. And as always, if you have some suggestions on things to improve and stuff like that, let us know in the comments. We are always trying to improve, and I think this will be it for me today. I hope everyone has had a very good Christmas. Dane and I plan to be back on Saturday for a new stream where we kind of go through the tickers for the week and talk about maybe a little bit of companies he did research on Tuesday and that I did today. Just to summarize everything a little bit. But you can see like a lot of the companies we have pulled up today, at least, has moved up quite a bit since October, like around October. So it seems like we are, for certain companies at least, we are in a good trend, and hopefully that will continue. So we can get some new opportunities, and with the interest rate news that came out a little bit ago, it was a little bit bullish for the general market. But we need to see how that develops. It's still tough times for a lot of people. A lot of people need to save a lot of money just to get by. So that's something to, of course, keep an eye on. And you see in the articles also there's a lot of people now mentioning the tough environment that we are in. But as I said, if you look at the tracker, oh sorry, now there's something. Sometimes this happens after midnight, that these get an error here, and they come back. They come back tomorrow. But if you see, my point was, if you look at the monthly and the 3 month change, you see a lot of green stuff here now. So a lot of the companies here have had some solid 3 months in like the past 3 months. And also you can see I get some of these multi-baggers here since I added them, but I missed out on most of them. At least I didn't buy. But yeah, I think that's it for me for today, and I will or we will see you on Saturday. So I'm looking forward to that, and thanks again to the new subscribers. I hope we will continue to gain some new ones, and I hope you all find this valuable, and we will continue to do this. But we want some feedback on how to improve, and we would love a conversation going on in the chat eventually. But hopefully that can be something that comes with time here. So okay, see you on Saturday.